Bitcoin Tax Explained. How Bitcoin is taxed in 2021. Bitcoin makes headlines again as we close out the tax year 2020 and Bitcoin reaches all-time highs. Again, the IRS will be waiting for their fair share of your gains. Hello everyone, welcome to Flying Swan Online. In this video, we are going to be talking about the latest IRS guidelines for Bitcoin and virtual currencies so you can be ready for the next tax season. Please note that this video and all videos on this channel are intended as purely informational. You should always consult with your professional tax attorney if you are unsure about your tax filings. In 2014, the IRS acknowledged virtual currencies and released Notice 2014-21, which answered some questions about how Bitcoin and other cryptocurrencies should be taxed. This notice stated that for federal tax purposes, virtual currencies are treated as property, which means they will be treated similar to how stocks, bonds, and other property is treated for federal tax purposes. So anytime you dispose of Bitcoin, which is held as a capital asset, you would be subject to capital gains or losses. The IRS also clarified that like-kind exchanges are not allowed, so any exchanges between two cryptocurrencies would trigger a taxable event, which means if you trade Bitcoin or another alternate coin for something else, it will trigger a capital gain or loss calculation. Calculating your capital gains or losses would take the fair market value for which a Bitcoin sold minus the cost basis for that Bitcoin. So essentially, it is the price that you sold it for minus the price that you paid for it. The most difficult part of this calculation is understanding what cost basis you need to use, since most Bitcoin investors are buying Bitcoin on different days at different prices. Understanding which Bitcoin cost basis you are selling could be a challenge. You can apply different cost basis calculation methods when calculating your Bitcoin capital gains, but some of the most popular would be the first in first out and the specific identification method. The first in first out method is just what it sounds like. The first Bitcoin you bought would be the first one that you are sold. So here you would keep track of your cost of each of the dates that you bought Bitcoin, and then as you calibrate the first ones that you bought would be the cost basis that is being sold. With the specific identification method, you are able to specify which Bitcoin cost basis you are selling. There could be advantages and disadvantages in using either of these methods, but it depends on what price you bought Bitcoin at and what you are selling to understand how it would impact you for tax purposes. The timing of your sale could also impact what rates you are being taxed at. Within 12 months of the buy date, property that being sold is subject to short-term capital gains. These rates would be the same as your ordinary income rates. But if you do hold onto the property for over 12 months, you will be benefit from the capital tax rates. Now, that's just a brief background of how Bitcoin and cryptocurrencies are taxed as property and how you would calculate the capital gains. More recently, in 2019, the IRS released Arrive Rule number 2019-24 and then some additional information about airdrops, soft forks, and hard forks. All of these documents are issued by the IRS, and I will leave a link and description of all of the PDF to say come look at them all in detail. In the guidance released by the IRS, they went into details about blockchain soft forks and hard forks. With the soft fork, the code for the blockchain is being updated, but there aren't any new clients that are being created, so there shouldn't be any tax consequences. It's simply an upgrade to the protocol. Now, if there is a hard fork in the blockchain, this usually means that there is a split in the code and two or more branches are created. This means you will receive new coins after a hard fork, and the IRS had specified that those new coins will be treated as ordinary income. According to the IRS guidelines, the fair market value at the time in which the new coins were received is them out that would be included in ordinary income. If you were to sell these new hard fork coins, it would also be subject to capital gains or losses using the fair market value at the time you receive them as a cost basis. Similar to hard forks, if you receive any airdrops of virtual currencies, those are also subject to ordinary income at the fair market value at the time you received those airdrops. So with all these different IRS guidelines, how can Bitcoin investors be compliant when filing their taxes? On the tax forms for 2019, the IRS for the first time included a question on Schedule 1, which adds to any time during 2019 did you receive, sell, send, and exchange or otherwise acquire any financial interest in any virtual currency? Any individual that has done any of these during the tax year should mark this question as yes. Additionally, if you were subject to any capital gains or losses, you do need to file a Form 8949. The calculation to get the capital gains or losses to fill out Form 8949 can get complex. You do need detailed information for all the transactions that happen throughout the year. These can be found in reports from the exchanges that you can export, and I recommend using a software solution something like cryptotrader.tax or CoinTracker that can help you identify the cost basis and calculate your capital gains or losses. I use cryptotrader.tax and I have for a few years, and I use it to calculate my capital gains or losses and also to track all of my cost basis for any purchase that I make during that year. And finally, if you have used any cryptocurrency exchange which are overseas, you may be subject to FBAR foreign reporting, which is a statement of the specified foreign financial assets, and on this form you just specify if you held over $10,000 in assets in any foreign bank account. So this would include any of the cryptocurrency exchange which are located overseas. So if you have held over $10,000 in assets at any time throughout the year, you do want to make sure you file this form. You may also be subject to factor reporting, so make sure you know all the different foreign requirements before dealing with any foreign exchanges. So that was just a summary of the major areas of how Bitcoin and cryptocurrencies are taxed. There's a lot more information that we couldn't cover in this video. Please look at the links below and read the IRS guidelines if you need more details. Thanks everyone for watching this video. If you like this content, please consider subscribing and liking this video. If you have any feedback or question, leave them in the comment and I will be sure to check them. Thank you.